evening. My name is Faisal Khatib, and I've got Damon Ritenhouse here with me.
Good morning, or good afternoon. Good evening, Faisal. Pleasure to be here.
Thanks for coming, Damon. We are Better Informed Housing. Better Informed Housing Corporation. It's an Illinois nonprofit organization that provides education information to communities about real estate. For more information, you can call 312-533-2688, or you can email at neighbors@betterinformed.org. And our website is www.betterinformed.org. So we're here today. Damon and I are going to talk a little bit about tax prorations.
Yeah, Faisal, it's a topic that has been coming up a lot lately. I think the real estate market's really been picking up. There's been a lot more real estate transactions. And I think it'd be helpful for people to get an understanding in layman's terms about how tax prorations work, the value a lawyer can have in that process, and really just making them better informed when they get to the closing table, whether they're sellers, buyers, or just trying to understand the market a little bit better.
No, absolutely. Essentially, real estate taxes are something that every property owner has to deal with. So when you own a property, you pay taxes, and when the taxes come out, you have to pay that tax bill. So there's that discussion. And then, of course, the other thing we're going to talk about today is when, as you're saying, when you sell a property or buy a property, how do you calculate the taxes based on how complex the process is just regularly paying taxes, right?
Yeah, and you know, to go into further a little bit more, taxes have been in the news a lot lately. Property taxes in Cook County, I think, are something a lot of people are talking about and interested in. So I really felt like it would be good for me to get a better understanding, and I'd like for our viewers to be able to get a better understanding of their tax bills where they live, even if you're not moving, and certainly if you're in the market as a buyer or seller. It's very important to understand that when you sit down at the closing table.
Absolutely. So like on a very basic level to start out, as you may or may not know, taxes are paid in arrears. So the taxes, for example, the 2016 calendar year, from January 2016 to December 2016, don't get paid until 2017, the following year. So, and they're split up into two payments. You've got the first installment, which in Cook County is 55% of the total tax bill. That's paid in the first installment, which is in March of 2016. That's when the tax bill comes out. And then the second installment comes out in September of 2017 for the second installment of 2016's taxes. Now this is important because it really complicates the tax prorations when you're buying and selling a property. So for example, if you look at this sheet, we'll zoom in a little bit here. Okay, that didn't work. Well, I guess that's not working as well as I thought it would. Ah, there we go. Oops. So if you look at the tax bill, it usually talks about your first installment, okay, and the total amount that you paid, and that's the tax amount that's billed, and that's the tax due date. So that's the first installment. It's payable in 2017 for March 2017, and that applies to the first half of 2016 as a year. Then the second installment will come in September.
Baseline piece of information for folks to have. You know, like I said, something that I think a lot of people are interested in as the real estate market heats up is how do taxes and as you mentioned, tax prorations affect you. I'd like to talk a little bit about it from a buyer's perspective and the value that a lawyer can bring from a buyer's perspective with taxes, and then we can switch over and talk to how it might be relevant from a seller's perspective.
Absolutely. So we'll talk about, looking at this is kind of the same type of property. If you notice, the tax bill for 2016, as I showed you earlier, was for the first half that was payable in March. But if you look at the prior years, it's more. So in this case, it was like $4,800, and the tax bill was $2,500. So the way the tax bill is split is you have the first installment is 55% of the total amount of taxes for that year. And then when we look at how to calculate it, it's really based on a prior proration. So we'll look at it here, Damon. So we've got the total taxes, if you recall, and I'm going to write it right here on this page right here, was $4,884.98. Forgive the handwriting to everybody out there. So that was the total taxes for 2016. Okay?
Okay.
So 55% is the first installment. So we can extrapolate or calculate what the second installment would be coming for the coming year. So for the second installment of 2016, it would be 45%.
Okay.
So we know that's approximately what it's going to look like, and if you notice, that's the total amount right here. Okay,
Right.
that $4,884.98. So the issue is because that second installment hasn't come out, it becomes very difficult to calculate and figure out how to do the taxes. So what we do is we take, since we don't have a full year of taxes, we do have a full year for the 2015 taxes.
Okay.
Okay? So looking at this previous sheet that I had showed you, the same property in 2015 was $4,884.98. So the way we calculate it is we take the $4,848.98, okay? We look at what the first installment was, and we calculate what the second installment is. So that gives us what we figure the second installment calculation would be for 2016.
Okay.
Okay? Now, we take the full dollar amount for 2015, our full year, and if you look here, we took, now depending on what you negotiate from a buy standpoint.
Right.
So, depending on your attorney and your real estate agent will determine whether what this number is. But because the concept is that you're buying it for more than what the seller had bought it for, there's an increase in value. Plus, recently we know from Cook County, they're raising the tax rates on City of Chicago properties by about 10%. So what usually happens is they'll do an increased proration above what the last full year taxes were. So the last full year was $4,485 and change. We multiply that by 110%, and that gives you this number right here, which is that 4933.48. Okay?
Okay.
So we took the prior year of 2015, okay, multiplied it by 110% proration, and that's usually a negotiated amount. Buyers always want to increase that as much as possible.
Right.
And sellers always want to decrease it as much as possible, obviously.
Sure.
So that can be anywhere between 100 to 120, and I've seen as high as 150% at closings. So in this case, we've got 110%. And so that's what this number comes out, which is the $4,933. Okay?
Okay.
Now, to calculate what the proration is going to be at closing, we take the taxes that I already paid. So this was the first installment, okay, that just came out in March of 2017, was this number, okay? Notice it's the same number as up here and this number down here. So this is the amount that was already paid in March of 2017.
Okay.
Okay? That's for the first installment of the 2016 taxes. So we take that, and we get that from the Cook County Treasurer's Report, which I showed earlier, which is here, which says how much was actually paid in the first installment. Okay? So now that we figured out how much was actually paid, we deduct that from the $4,933.
Okay.
Because it's already been paid.
Right.
So what we're trying to prorate is the difference for the second half of 2016 through December of 2016. Okay? And if you take the 4933.48 minus the 2446.74, which is right here, okay? These two numbers, you end up with 2466.74. Now, it's a little interesting how the numbers worked out because we used 110%. And at 55% and 45%, it's a manipulation of percentages.
Sure.
So I don't want to get too deep into that, but at least you see kind of how the math got through. Then, now that you've got, this is what's remaining estimated to be paid for the second half of 2016. So this will come out, the tax bill for 2016, second installment bill, okay, will come out in September of 2017.
Okay.
So when that bill comes out, that number should be 2466.74 or less, okay?
Right.
But this is how much the seller has said, look, I owned the property from July 1st of 2016 to December 31st of 2016,
Mm-hmm.
and my part of the taxes is this amount, and I'm going to give this to you at closing to cover.
Okay.
Okay? So that takes care of 2016. All right?
Okay.
That leaves the 2017 taxes.
Right.
Because in 2017 you have from 2017 through the closing date.
Right.
Okay? So just for our purposes, we're going to make today the closing date. So if you look up here, from 1/1/17 to 6/9/17, what we did is we counted the number of days
Right.
that are in the year. So that's 365 days.
Right.
And we figured out how many days are from the 1st of the year until the 19th. All right?
Okay.
That comes out to 170 days.
Okay.
Now when you're calculating, we have to include the 19th.
I see.
Right? So it would be 170 days plus 1 day
Mm-hmm.
for the actual day of closing.
Okay.
So a total for 171 days.
Got it.
Okay? So then what we did was we took this total number, okay?
Right.
We divided by 365. So if you notice that that number comes here,
Okay.
okay? So that total, that's the 110% proration of the 2015 taxes. We divide it by 365. And we end up with what we call a per diem.
And that's per day, right?
Correct. That is the taxes per day that the seller has to pay for when he owned the house.
Right.
Now, the question is, why would you do it this way, right? So the reason we're doing this is because the actual 2017 tax bill doesn't come out until 2018.
Right.
So we take the per diem, we multiply it by the 170 days, that comes out to 2297.78, and then we add one more day, okay,
Right.
to include the extra day of the closing date.
Okay.
So based on this total structure, what should be expected at closing is the remainder of 2466.74. This is for the second 2016 installment.
Okay.
Plus the taxes that were outstanding that for 2017
Right.
that we still don't have a bill yet,
Right.
But as a buyer, we didn't own the property yet.
During that time.
So we don't owe those taxes. Those taxes are really owed by the seller.
Right.
So that comes, you add another $2,297.78, okay?
Okay.
And then we add the $13.52, right?
Right.
For the closing day.
Right.
Now, if we calculate that out, and we'll calculate that out here on my calculator, see if it works. So we have, let's see if we can do this so it still shows up on the screen. We have 2466.74 plus 2297. I hope nobody calls me right now. Plus $13.52. That comes out to $4,778.04. So at closing, I should expect the buyer
Right.
should get a credit for this amount
Okay.
at closing.
Okay. So I think that's a good baseline with the mathematical figures, and hopefully that was fairly easy for our folks at home to be able to follow along with. I just want to clarify a couple points and maybe bring a little color to this
Sure.
issue. We mentioned that proration is 110%, and I think that's interesting, and I think you talked about how that could fluctuate a little bit, and there's some negotiation there. Can you talk a little bit about how, what the industry standard is, and then how much flexibility there are in these transactions, and some maybe experiences that you've had negotiating favorable terms for clients at a higher rate?
That's actually a very good question. But before we jump there, we're going to at least let the world know who we are.
Of course.
We are Better Informed Housing. You can call us. We are live right now. You can call us 312-738-1060. And, we have to zoom out. There we go. That's a little bit too much there. But you can, Better Informed Housing Corporation providing education, information to communities about real estate. For information, you can always call the main number, 312-533-2688, or you can email at neighbors@betterinformed.org, or visit our website at www.betterinformed.org. So, to understand if I understood your question was, where did this 110% come from?
Right.
And how flexible is that?
Exactly.
It's a very good question. So it really depends on how aggressive your attorney is, how aggressive they want to be, how cooperative the other side is. I've always found that whenever I'm asking for a number, if I'm on the buy side, I'm really going to look at what is the historical value of the property. So, for example, if we look at here, this is from the Cook County Assessor's Office. Okay. So the thing with the assessor's office, it'll tell us how much the assessor valued the property of the building. So for example, here in 2016, the assessor assessed the value as the total building as $26,504, and the same was for 2017.
Okay.
So what I found sometimes is that this number and this number, when they're the same, it makes it kind of tough to actually ask for more money.
Right.
But when they're different, it gives a huge justification. So like if this number, for example, were $35,000 or $40,000 in terms of reassessed value,
Okay.
that allows me to go back to the other side, the seller, and say, hey, look, we need more money because the assessor just jacked up the valuation of the property.
And so you want to be able to protect your client as the value gets higher to make sure that they're
Exactly.
getting the appropriate contribution for the time period that the seller owned the property.
Correct. So coming back to our calculation sheet that we looked at, if we were to go through here, right, and so we came up with 477809,
Right.
it's very possible that when the city of Chicago raises their taxes and the county raises their taxes, that this number could become $6,000.
Sure.
Right? Now, what does that mean? Essentially, the tax bill equaled $6,000, but this buyer only got $4,700. So essentially, the buyer is paying, $1,500 or $1,300 of the seller's taxes,
Right.
when that really should have been the buyer's taxes.
Right.
So if the prorations aren't correct, or the tax proration amount of 110% or whatever that increased percentage is inaccurate or isn't enough, then the buyer gets the short end of the stick.
Okay.
On the other side of that, the seller, if he gives up too much money, then the seller gave up more money than what the taxes were owed. So that's where the give and take comes in.
That's good to know, and I think it's important for viewers to understand and for clients that come in, whether you're on the buyer or seller side, you need to have an attorney who's savvy and understands that each deal is going to be a little bit different. And I think
Right.
The point that Faisal made about the fluctuating property values is a good one. If values have remained static, it may be trickier to negotiate a higher proration. But if you've seen a climbing trend, and as we referenced earlier, it's likely in Cook County that those values are going to continue to climb. You really want your attorney, from a buyer's perspective, negotiating as much money as you can to help soften that blow, because you are going to get a bill for a time period that you didn't even own the property. Again,
Correct.
Faisal clarified the arrearage nature of this, so that's a factor that I'm not sure a lot of people understand properly, and I think it's really at the heart of why it's important to negotiate the favorable terms that you can from a buyer's side. Now, again, if you're representing a seller, you're really on the flip side, where you want to pay your fair share, but you certainly don't want to pay any more than that.
Correct. Right.
And there's an inherent tension there. But I think that's an interesting insight into the process and why having an attorney really scrutinize those values is critically important.
It becomes even a bigger issue, Damon, when you have a situation where the buyer's buying a property that just got rehabbed.
Sure.
So, for example, if a buyer's buying a property, investor buys the property, they spend $200,000 to buy the property, but they put $200,000 into it, and then sell it for $800,000 or $700,000 or whatever that number
Sure.
is. The mere fact that they put more work into it, especially if they did the right way and they pulled permits from the city of Chicago, then the city of Chicago is already aware, and the county is already aware, that work has been done to the property. So they know that there's a higher value.
Okay.
and they know what it sold for 200,000, 6 months earlier, but now it's selling for 500,000.
Right.
That increase in value is going to create a huge jump
Right.
when it comes to tax prorations and taxes. So it's really important from a buy side in order to figure out, did that take place and what did the prior property sell for? How long has it been in this owner's name?
Okay.
And then, for example, was it a quick investor? Did they buy it for cheap and then resold it?
Right.
What exactly took place in the history of the property is helpful to figure out what the tax proration should be, okay?
And yes, I think that's another great insight, and I think really goes to the idea of each transaction can be a little bit different. If you're buying a property from someone who's owned it for 30 years and the values remain pretty static year over year, there might not be a lot of wiggle room with the tax prorations. But
Right.
in the instance Faisal describes, which is very common in Cook County, where properties have changed hands quickly and values have fluctuated wildly, it's really important for your attorney to be sophisticated enough to understand that just because a tax bill was one thing in 2015, it might not be the same and probably won't be the same in 2016, 17, and beyond. So you really need to be able to understand how those bills are going to play out in the future. Otherwise, you could be left with a major tax burden that you didn't get enough credit for.
Correct. That's exactly the case.
And Faisal, if I could just ask another question. Speaking of credits, we have the number here of 477804. And I wonder if you could just explain how that is dispersed at the closing table or what it means to get a credit as a buyer in this instance.
Oh, that's a great, and I wish I had one of those HUDs I could show you.
Of course.
But essentially what will happen is the buyer will show up to the closing table and it'll have the purchase price. You have two sides to the HUD. One side is for the seller, which is usually on the left side. And then you have the other side for the buyer, which is usually on the right side, especially with the new settlement statements pursuant to the new regulations.
And just to clarify, this is a document that lists all the terms of the transaction.
Correct.
The amounts of purchase and other monetary amounts. So I just want to make sure.
It's
folks
called a
understand.
settlement statement. So what we'll have in that settlement statement is every charge and cost and expense.
Right.
And all the money that's brought to the table from both sides is brought into, and this paper will reflect, this document will reflect all that transaction.
Okay.
And so what you'll see is, that it'll reduce the amount of money going to the seller by this $4,778.
Got it.
Okay? And then it will increase the amount of money going to the buyer. Okay?
Okay.
So then the buyer, for example, has to show up with $100,000 to buy the place. Now they would show up with $100,000 minus the $4,778 that the seller is giving them for a credit.
Okay.
Okay? By reducing the amount of money that they're having to bring to the table, that essentially is the benefit that the buyer is getting from the tax credit. Now, there's going to be other charges to that settlement statement. There's going to be title fees, costs.
Sure.
If you have a lender, there's going to be a lender's policy. So there's a whole bunch of other things which we can talk about in another session.
Okay.
But really, as you were saying, the fees will come off the tax prorations will come across as a credit in order to reduce the amount that the buyer has to bring to the table.
Okay. Yeah, I think that's a good point for folks to understand. It's not necessarily money that they'll be taking from the table, but it's less that they have to bring to the overall transaction in order to get the property put into their name.
Which is very confusing because I've come across many situations where the buyer thinks that the property, that they're like, well, wait a minute, the taxes got paid when I bought the property. How come there was a credit and there was all this money? Well, that credit wasn't used to put in an escrow to pay the taxes, or wasn't even transferred to the title or to the county. All that credit was given to the buyer to reduce the amount of money that they're owed.
I see. Well, Faisal, I think that's been very informative. I know we covered a lot of ground in a fairly short period of time, but hopefully we've been able to give people a real general overview of how tax prorations work and really hammer home the idea that you need a real estate attorney who's sophisticated, especially if you're going to buy a property that's undergone some very recent changes. And in this tax climate, it really is worth your while to have someone who can navigate that system for you.
Absolutely, absolutely. And for everybody else, just letting you know, we want to thank you all. We are Better Informed Housing Corporation. It's an Illinois nonprofit organization providing education and information to communities about real estate. For more information, you can call 312-533-2688. Neighbors@betterinformed.org is the email, and the website is www.betterinformed.org. Again, my name is Faisal Khatib. I'm an attorney here in Chicago. With me is Damon Ritenhouse. Thank you very much and have a good night.
Thank you.